As regular listeners will know, every other Tuesday on my show in the mornings, we talk to Christina Brady from Blacktower Financial Management, and been doing it for a while now, so always some useful stuff imparted, and especially over the last couple of years. What I thought we'd do here is, just once every quarter, is catch up with, I hesitate to call him the head honcho there, we're talking about Group MD and founder of Blacktower Financial Management, John Westwood. John, hi.
Hi, good morning and good afternoon, wherever you are in the world. Hi.
Well, it's morning where you are. You're based in the Cayman Islands, right?
I'm currently in the Cayman Islands. I'm working here for the company at the moment. Yeah, we're on a project over in this part of the world, so we're spending a little bit of time here just putting that project to bed. So normally I'm based in Gibraltar, but I have to be here for this particular purpose.
Yeah, I mean, we do make clear, because although we talk about some of the tax implications between Spain and the UK, that sort of thing with Christina, very much an international company.
Yeah, we are. We've grown enormously over the last 10 years from sort of the beginnings in the United Kingdom back in 1986 when I started the business. So now the company has a considerable global footprint, really, offices throughout United Kingdom, America, the Cayman Islands, Trinidad, Tobago, down in Chile, would you believe, and also soon in Panama. And we're just opening in Switzerland and in the UAE later this year. So it's grown enormously.
Absolutely. I mean, and that's some time in business as well. And we always like to point that out because it's a pretty good sign for people looking around for a company to invest with. That the size you are now, but also the the length of time and the things you've seen over the years as well. I mean, starting in '86, you've been through a few ups and downs as far as the economy goes, that sort of thing, especially worldwide even.
Yeah, that's really true. I mean, the biggest one being, of course, 2008, which was very severe for everybody concerned in the financial markets and indeed consumers as well. So yeah, seen some difficult times, and we've had to make during those times emergency decisions to protect clients' assets. It can be quite testing, but I think that the test is, being around from 1986, you've seen a lot and you've gained an awful lot of experience in how to look after people's assets and financial affairs over that period of time.
Sure. I mean, the big crash in 2008, as you say, you can sort of see that coming a little bit, I'm sure, with you're watching everything with people's investments at stake. But how much can you do? There's not necessarily so much you can do to avert a major crisis yourself.
Yeah, it's an interesting point. I think financial crises start to brew, and you can start to tell when you can see a financial crisis brewing. Sometimes it catch you, like the 2008 one. We saw it perhaps happening, but when it happened, it was extremely quick. I mean, effectively, it happened on September the 29th, 2008, when the world just changed and markets went down to 30 and 40%. So nobody actually saw that coming. But in hindsight, I think, one can protect oneself against that now. And certainly the financial institutions and the financial markets are much better placed to understand how these things happen and protecting the downsides for client investments. In 2008, I don't think we ever believed it could crash that far. We know it can. And I think the industry as a whole has grown up and understands those particular problems. And that kind of thing, I would be very surprised if it ever was allowed to happen again.
Sure. And of course, yeah, you've seen that come and go. And if there's anything I've learned from Christina, it's about diversification and not putting all your eggs in one basket. So, spreading the risk, as it were.
Yeah, absolutely. It's the key to all financial planning, is to spread your risk over a wide, broad range of assets. Assets also that suit your purpose and your attitude to investment. I think one of the things that people often get wrong is the way they invest and the type of investments they make. We often see persons with money which really they can't afford to lose. So you're looking at capital protection. And when you examine the portfolio, it's just taking too much risk. So you've got to be very careful and listen to the advisors in judging and understanding the level of risk you're prepared to take. And of course, also equally as important, it's the time you're prepared to invest as well. Time is a great healer in all investment and stock markets. And if you can stay in the market and take that little bit of extra risk, you'll probably be rewarded. But if you're In retirement, perhaps you don't want to take those risks, so you need to be very careful about how much you invest, and of course how you allocate those investments to the assets. It's paramount in all planning.
And from the outside looking in, it would appear, I mean, how much have investors changed over the years since you started? Because it would strike me that, I don't know, I get the sense that they might be a little bit more impatient these days. And you say they want their returns quicker and prepared to take a bit more risk. Or does that depend on who you're talking to, what age group and the like?
I think people have, over the last sort of decade or so, enjoyed good returns in the markets, and therefore are and wish to continue with those very good returns. And that's a natural reaction to all investment. But I think people are more educated today in the types of investments that are available. And so you can have a more educated conversation with an investor these days than perhaps you could back in 1986. But yeah, there is a feeling that markets only ever go up, and risk is not that real, and that is wrong. We've seen too much recently of fringe investments coming back into the market as they were around in the late 80s and early 90s. And we've seen bitcoins coming into people's portfolios where it's wholly inappropriate to hold bitcoins in a low risk portfolio. Okay, so the market has shown that Bitcoin has been a spectacular investment over the last 12 months, returning some 800%. That's fantastic. But of course, the risk element attached to that is enormous. And really, it's not suitable for everyone at all.
No, and it's one of those, because of the barely any regulation, although it seems to be creeping in to that, you couldn't really possibly take that on as putting into someone's portfolio.
No, we can't. As an organisation, we are risk averse. Most of our clients are middle-aged to retired age, and really have a finite amount of capital. So risk is very important because they can't afford to lose the capital. Our job is to maintain and engineer positive outcomes for our investors, and we can't do that by taking extraordinary risk. It just doesn't work in any sense at all.
No, and we have discussed the cryptocurrencies with Christina, and it's an interesting way of getting started. The main point she does make is, like anything really, just only put in what you can afford to lose. But it does give you, if you're watching that, maybe on your phone with one of the apps, it gives you a sense, if you've not invested before, of how things can go up and down, and gets you a little bit used to it and not panicking when it drops a bit, because you've got to look at it a bit longer term than day by day.
Yeah, I think that's a really valid point, actually. I think Bitcoin, it's been so widely published, has brought a certain amount of investment to everybody, and via their mobile phone as well. Interestingly enough, in the United Kingdom, about a month ago, the Financial Conduct Authority issued a warning because it saw that Bitcoin was being invested in by very young people with no experience at all, and also with no ability or no capability of losing money with their investments. So they were putting in all they had in their savings into Bitcoin. Now that can work for a period of time, but of course, as soon as Bitcoin growth reverses, and of course it will over a period of time, it will go up and down, it's extremely volatile, then money can be lost at an inappropriate time. So as Christine is absolutely right in her comment there, Bitcoin at the moment should only be invested in if you can afford to lose the amount of money that you invested. I firmly believe over time, as the world goes forward over the next 10 to 15 years, Bitcoin will be more of a mainstream investment. But at the moment, we couldn't call it mainstream. It is fringe investment still.
Mm-hmm. Yes, yeah, we're talking about those investors that think trees keep growing up to the sky. I think is the phrase I saw used somewhere, which is pretty good, actually. I saw in our notes, especially as we're talking in the first one here about the company, AUM. Now, is that assets under management?
That is assets under management. That's the sort of acronym we use for it. Yes, AUM stands for assets under management.
Okay, so if we're talking worldwide, are you able to say the amount of assets managed worldwide? Give us a rough idea.
Yes, I can. It was recently published in our industry press. We value our assets in dollars because of our multi-jurisdictional basis. So currently, as that's our audit at the end of February this year, we had $2 billion American dollars of client funds under our influence and investment management.
Wow. Again, it tells you something about the company if anyone's thinking and looking at investing. Now, obviously, particularly if you're based in Gibraltar, it's been an interesting time over the last 4 or 5 years, but certainly the last year or two. And we're still dealing with it, I guess. Maybe people moving to Spain and their products aren't tax compliant, that sort of thing. How much are you having to deal with at the moment as far as that sort of thing is concerned?
Yeah, Brexit has been an interesting time for everyone, and Blacktower is not excluded from that. When Brexit was first mooted, we realised very quickly that the Blacktower business model, because we were Gibraltar-based for our European business, was not going to work going forward. So we had to reorganise the company in light of what Brexit might deliver back to the business. So we opened up further EU licensed entities to really Brexit-proof our whole business from a European perspective, and that really has changed the way we look at things. Gibraltar, as you know, is not a beneficiary of Brexit. It's tied to the UK, so it's lost its European footing in many ways. And what we've seen with regard to that is also a lot of the European investors that were in the market have had to restructure, because it's no longer acceptable if you're a European resident to really have UK-based products. Pensions are slightly different, but investments are not really suitable if they're UK-based now. And we're seeing this whole position really evolve as we speak. This will take some time to play out, but what's got to happen now, and it's pretty clear, is that when we're dealing with clients who are coming from the UK, and there still many are, or even returning back to the UK, there is and there has to be a redesign of the investment process and investment platform that they may be using to be tax compliant back in those jurisdictions wherever you start to reside again.
Mm-hmm. There have been quite a flurry of people hurrying over here to register, getting their residency. And it will mean, obviously, if they're here for more than 6 months, they become tax resident in Spain. Just because maybe they were working remotely and it's just a nicer place to station yourself. But they have maybe a property, business or financial products back in the UK. Have you seen any cases of people getting into a bit of bother because obviously they need to know where they're paying tax on those assets?
Yeah, I think it's early days for that at the moment. I genuinely believe that HMRC and the tax authorities have a light touch just as we speak. That won't continue. There is a period of time where they will allow people to reorganise themselves. But as we go forward now into a new year, going through 2021, UK tax year, we're into a new UK tax year now, people will be expected to reorganise their affairs to get them into a tax compliant arrangement for wherever they're living. I think the honeymoon period perhaps we had is starting to evaporate. And I think people now really need to look at what is going on. And if there is a situation which they're uncertain about, or changes need to be made because they've changed their residency or their domicile or their main sort of lifestyle, really, then they should really take some advice on that as we speak. We're in a honeymoon period. Tax authorities are giving it a fairly light touch, but that certainly won't continue for the rest of this year.
Yeah, and there are one or two niggly little things. Like I did see a story in one of our papers over here today about Spanish banks charging residents for money transfers from the UK at a higher rate than they would charge for national ones. It's been said they're doing so unlawfully. If it's completed via an IBAN, it should be the same, but it's not the case. Have you seen any cases of that yourself?
Yeah, we have. We've seen numerous instances where we have currency transactions taking place, even down to mobile phone bills now, really, where very quickly the EU has decided to treat the UK and the UK services as a third country, so not a member of the EU, and it doesn't have any of the club benefits that the EU subscribes to. So I guess in some ways what we're seeing here is the backlash of the UK leaving the EU markets, and to a certain extent we can't have it both ways.
All right, let's get around to what we're going to sort of continue doing from here on in and talking about the previous quarter. So if we talk to you every 3 months or so, we've done the first quarter of 2021. How's it been? I mean, the markets themselves, if we're talking some of their main stock markets, seem to be pretty good, faring pretty well.
They are. There is a good feeling in the markets as we speak. There's a lot going on. Obviously, markets are reacting to the possibility of us coming out of the COVID era of the last year.
Yeah.
Vaccines are being distributed now as best they can be. So we're seeing a bit of a bounce in the markets. There is optimism, and there's a few IPOs coming through, which are always good fuel for market growth. So it's a fairly good time. We had a bit of a downturn during the COVID period, as you are obviously aware, but I don't think it was so severe that it really was a long-term problem. What we're seeing at the moment is a flood of new money going into the markets generally, right around the globe. So we're looking perhaps, hopefully, for what I'm hoping will be a period of some gentle growth, and more importantly, some stability in the markets where we can see and predict where they're going. What we don't want to see is markets which are extremely volatile, going up one night, going down the next. That's no good for anybody. So stability and gentle growth, I think, is what we're looking for. And it would appear to be that's what's coming through.
Is it realistic, though, or are they being propped up by maybe public money going into supporting businesses and, well, the economy as a whole, really?
Oh, undoubtedly. Central support for businesses has been at an unprecedented level in history during the COVID period. And so central banks and government have played a major part in keeping stability. But this is what's needed in times of stress in the markets. We do need central government to help out, and we do need the banks to help out. And that provides the underpin to the markets and to the general economy and currency that everybody is looking for and hoping for. Nobody wants volatile markets. It doesn't do anybody any good. So when we get this central support, it's welcome and it's needed. This is what went wrong in 2008. The central governments and central banks were not prepared or for themselves to provide the central support that was required at that point in time. You can see now that there is more support coming through. Therefore, what you get is more stability in times of crisis.
But won't there come a time when that money needs to be reclaimed? I mean, it already is. Some of the taxes creeping in, but it has to be paid back at some point.
Absolutely, there's no free lunches.
Right.
So basically, we're looking at generational taxation, aren't we? I think probably we'll see gentle tax rises going through the rest of this decade, and frankly, I sadly have to admit that I think our children will be paying for this as well.
And what about the exchange rate? Because we touch on that with Christina as well, and it's obviously important to many of our listeners who would have, I always use the example of pensions coming over from the UK, being transferred to Spain. So it's been a little bit more in their benefit recently. Do we see that increasing further?
I think so. I think sterling there is a lot of faith in sterling at the moment. One of the things that's boosted sterling, of course, is the way that the government has handled the vaccine rollout, would you believe? So there's a bit of optimism around sterling. I think now the Brexit ship has sailed and we know where we are, what's got to be done. There's further work to do there, to be fair, to make sure that the UK economy doesn't go backwards, it actually goes forward. But I think that in the central banking sense, in the money market sense, we are seeing that sterling is slightly more back in favour. And there's a bit of chaos in Europe at the moment, again centred around COVID, and that is affecting the value of the euro.
Yes, I guess I always say as well that when we're looking at the exchange rate between the euro and sterling, it could mean that one's down and one's up, or they cancel each other out. So we never know what's causing it. But sometimes we do see that rise, and it has been well over 117 recently. I think just dropped back a little bit in the last couple of days, but not too bad compared to how it was maybe a year ago.
Yeah, and I think if you always remember that the major driver for currency is sentiment. If people like the country or the government or what's going on in that particular country, the currency tends to go up. So apart from other things, sentiment is a big driver for the value of currency.
Well, so they do like the UK government then. So, well, they like what they've done with the vaccine rollout. I think that's been a real positive out of everything. Absolutely. The vaccine rollout has been globally applauded. Gibraltar has been globally applauded because it's vaccinated everybody and now it's COVID-free as a nation. So, I think that has been a big feather in the cap of the UK government. There's been many things that have got wrong over the last year or so, or 2 years particularly, but this one I think has really helped them along with sentiment. Mm-hmm. Yes, I mean, but they're not the only ones, of course. No one really knew what to do, especially at the start, and you're kind of making things up as we go along. because it's not really anything we've seen before in this generation.
Yeah, absolutely right. I totally agree with that. If you were the prime minister at that point in time, and then you suddenly were landed with this particular problem, I mean, it's enormous, isn't it? So everybody has to try and do their bit. And yes, of course, it didn't get everything wrong, but largely they got things correct, I think.
But it's always been since the start that balance, particularly when it comes to lockdown, of looking after the economy but looking after people's health. And where do you draw the line? Where do you sort of have to meet in the middle somewhere?
Yeah, I think with this particular pandemic, one had to take the view that we didn't know where it was heading. It could have been more contagious than, well, it's very contagious, of course, but, was it going to spread right throughout the whole population? And the actions that were taken, yes, they were done, some of them were done in panic, but at the end of the day, you didn't know what you were dealing with, and you had to take very severe action to try and protect what you could, whilst you're learning about the situation as you go along.
Okay, so I think you've kind of touched on where you maybe see the markets going this year, but some of these figures that have been touted for some of the national economies and their growth, are you pretty much sort of in line with that? Do you see the return to growth at some point soon?
Yeah, I think so. As I say, economies are not in bad shape. A lot of money has been spent over the last year, but economies generally are not in bad shape. And I think I would not be at the moment too pessimistic about what's going to be happening over the next couple of years. I think we could be going in for a period of growth. I hope we're going in for a period of growth and reinvestment, which is very important. Okay, there's some alignment to take place and reorganisation to take place, but that sometimes is not a bad thing. So yes, I'm reasonably optimistic that the next few years we should see hopefully some stability. Well, if it starts to change, we'll know about it in advance. We look at the sentiment indicators all the time. But yeah, to be honest, as an investor, I'm not that unhappy as we stand.
Good. Well, as you know, we should know what you're talking about. I think, as we've mentioned, all the years in business and the kind of company that Blacktower Financial Management is, as we know from talking to Christina every other Tuesday. Well, thank you for that. And I'll tell you what we'll do. We'll catch up with you in 3 months' time, if that's all right with you.
I look forward to that, and yes, and hopefully the next 3 months will be enjoyable for everybody investing.
We'll see where we're at then. Thanks ever so much, John. Thanks for your time.
My pleasure. Take care.